Welcome back, peer structure traders, for another market analysis for the London session. Today is March 3rd, 2021 here in Hawaii, and will be March 4th, 2021 in London. Today we're going to be going over S&P 500 and also gold, give you guys some levels for the London session and also potentially into the US session. So with that said, guys, let's go ahead and hop into it. We did have a nice downward movement. Like we said before, guys, getting under those 68 to 65s was going to give us a pull to the downside, and you can see how awesome that actual move was for the day. We did have it under 65.75, and the market kept rejecting that level. So very good bunch of resistances right in this area, and the market kept pulling down. You can see how it structurally formed resistance under the support, and it was just an easy trend trading day, honestly, today. If you found yourself buying, just know that a lot of the buying opportunities were fade opportunities against this strong bearish trend. Not that you couldn't make money, there's always opportunities to make money on both ends, but just know what types of approaches or strategies you're putting on. Again, remember and always keep in mind, context is the most important thing here. It doesn't matter how much strategies you got in your book. If you don't understand the correct context of the market, then the strategies are more than likely going to fail you time after time after time. That consistency is never going to be found until you understand how to properly assess the structure of the market, get the correct context out of that market, and then look to apply the strategy or approach. So for today, S&P 500 still in a strong bearish trend right now. Now our resistances for right now we're going to be looking at here is going to be right around here, first level 3809.50. See if we get some resistance here. Could look out for a nice double top. You can see it happen right here at this level. Nice little double top, fall off. Gonna look for the same type of movement. Could pull to the upside, reject this area, and then fall back down. It could even just make a V-top and then reject that level and try to fall and make a new push lower, right? So our attempt there is going to be looking to try to short off that level. Now, if we fail to get a resistance at that level, look out for those 38.1850s. Above that, though, if we get through this level, it may come back, act as support, and then try to pull to the upside of 44.25, then back into our next level of 65.75. 65.75, a major level of resistance right there. So keep an eye out for that area. But that's what's going to happen if we try to break through those 1850s, and then we may get a pull back up to those 44s. Now, if the market fails those 44s, we can look for the market to try to pull down again back into these 1850s. So not trying to pull and make a new low, but instead trying to break this area first, get back under here, reject the price like this, and then try to fall back down from there to our next level. The measured move here for the session and maybe potentially into the US session is try to see if the downside of 37.65 can actually be touched. We'll see if we can get that opportunity, but we did fall below the actual gap. I don't know if a lot of you know this, but we do teach how important understanding these gaps are, so that way you can understand the movement and why during the week you see the markets move up or back down. Hence what was going on for the past couple days and why we actually moved back down. But again, we're looking for this rejection, not to get off topic, but looking for that rejection to come back down, at least at bare minimum from 0950, if not 18.50, and then above that 44.25. Markets get above 65.75, we actually may see the market try to pull even higher from there and continue that bullish move. So we'll look out for that. Let's take a look at a smaller chart here on S&P, give you guys an idea of what's going on here on a smaller scale. So we zoom out of this, same kind of principles that we got. You could look out for a minor level that sits right in this area right here. You could look out for this area. I'm going to highlight that. That's going to be somewhere around these 3804.25s. Now, again, if it doesn't stop there, then we may see the market try to stretch its way back up into these areas. You can see 1850 going to be the top of that level. You could have another level right here at 1325. That could be another area of resistance that you could look for. But we'll see how the market actually reacts when it comes back into those areas. And then from there, we'll take a trade based off of the reaction or the price action and structure that it gives us. Let's take a look here at gold. Pop that up. You could see gold did have a nice downward movement for the continuation of the day, and then we pop right back up. from this level right here. So we can see we had a nice short opportunity right around these 13 to 14s. Market came up, double topped, one, two, started to fall down from this area. Wanted to see the break of the 09, took it, and then took some off at 09, but instead of it falling right away, actually had the market come back up, take the stop, and then come back down. So we took profit on that trade, but not as much as we'd like to because the trailing stop got taken out before the move lower. But you can see the collapse here. And then from there, we tried to come back and find that resistance, but really couldn't find that resistance to make another lower low. Instead, we popped back up and tried to make pushes higher. But you can see what happened. Market tried to come above this level, find that support, couldn't, came back underneath, rejection, rejection, and kept falling from there back to a main level of support, 1706.1. So again, right now, what are we looking at here for gold? To give you guys more of a wrap up here on these levels, we're still at resistance. Resistance for me, 1714.5 as a first level of resistance. Now, if we can't hold that level, next level, 1719.1. That's going to be my next area. So I'm looking for something like this. Either we get up to this level, fail it, and come back down, or we break through that level, fail this level, come back down. If we don't get those two scenarios to play out, then we may actually just shoot right through this level, come back, try to hold the support, and continue to our next levels above. All right, but ideally would like to see those 14.5s fail right here, or those buyers to fail, those sellers to come in and press it right back down. Major level again, 1706.1. Underneath that, you can see we have a newer low that we can highlight, 1699.7, that we potentially can actually get to again if we break those 1706.1s. But again, you want to just note, still in a strong bearish trend, but we want to see if the market can continue down from there. Let's look at a smaller chart here on gold. So we are trying to move our way back up into that area. Again, first level for assessment is those 14s, 1714.5. So we'll see if the market can actually get there, reject that price, and then pull down into the major level of 06.1. But again, guys, if you got this sideways consolidation you see happening right there, your first way of taking this is reject this price, get that rejection, and don't try to get the whole thing back to 1706. Come around these 10s, 09 10s, take some off, then pull it down into these 06s. All right, you get under these 06s, fine, you can try to hold that runner and take it down. But if you don't get that happening, take that profit off the table. Don't wait, don't try to run it. Take those coins and then look to assess and make another best trade after that. With that said, guys, just want to give you guys a shout out to those who are trading this morning, pure structure trading. Awesome stuff. You guys had some awesome trades. Great job at assessing the market structure and everything. And again, just want to give you guys a thumbs up for that. You guys did a good job. If anybody here, even on YouTube, is struggling to find consistency or understand how to read the markets correctly, feel free to contact us. Pop a word in here on YouTube. Ask the questions needed. We'll get back to you guys. Other than that, guys, hopefully you guys liked this video. Please go ahead and smash that like button if you guys did. If you're not subscribed to the channel yet, please go ahead and subscribe. Again, any questions you guys have, feel free to pop them in here on YouTube. And again, if you guys want to learn how to correctly read these markets, feel free to shoot us an email. Once that website launches, we will be having openings to take on clients there. If you guys want to join a program, or if you guys just want to start to see how we work the markets within the US session and the London session, we'll have opportunities and programs available for that as well. You guys take care. You guys have a good night.